Ladies and gentlemen, Kim here. Welcome to the market update. I hope you guys are having a good weekend this weekend. Today's Saturday evening time. And as you guys know, that we do a little bit more comprehensive analysis on these weekend analysis. And we'll look at a couple more tickers, and we'll look at like longer term picture as you're looking at on your screen. So we'll be looking at Spider, Qs, Diamond, Russell. We'll look at VIX, Gold, and as usual, we'll end the video with the Bitcoin. So I think at this point, I think a lot of people are wondering because statistically, seasonality wise, you do see good gains on the month of December, and it's kind of, they have even word for it, Santa rally, right? So I think that's what a lot of people are looking for it. And you know how it is, how the market is sometimes, right? When somebody's looking for it, maybe market not give it to them. Maybe this time will be same as before. If you want to know my thought about it is, I'm gonna stick with the word the trend is. I guess I would say something like I want to give benefit of the doubt to the Santa rally this month. We have about half month left before the end of this month, and on the last weekend analysis, I gave you there's potential. We probably get to 380 is very much doable, I believe. If this market really decide to really go 400 maybe. So those are two levels, and that's not just random levels either. As you can see here, I did a little fib analysis, and we'll talk all about this, and it is all coming up right now. Alright, so before we get into the analysis, let's actually follow up on that 65-minute chart analysis we've been talking about every single day this week, right? Which I cover this for you guys on a daily basis, on the daily update videos. So I was actually tweeting quite a bit but yesterday during the market hours, giving you guys some of these levels. You can see this is why the gap is so valuable, right? I mean, just looking at this thing right here, you see back in November 30th, how much problem did it give for bears because of this gap? You see this gap on the November 30th, right? It gapped from 362 to 365, and that gap gave trouble immediately because we actually fell next day and came down. We actually even gapped down, but only about halfway was filled, maybe less than half was filled. And from then on, 364, it went all the way to 370. So we made the run, and it all came from because what? The gap area. And then about 2-3 weeks later, what happens? Bears bringing it down, right? Bears are now getting pretty irritated that we've been in this bull run for quite a bit. So what happened on Thursday? It just pretty much down there every single day. It's been coming every single hour. It came down, right? So this is Wednesday and Thursday and Friday, right? So this is a Wednesday price action. This is Thursday price action. That's a Friday price action right here. So what you can see is on Wednesday, bears brought it down, and then Thursday we did see a gap down once again. We even pushed it down, got up, came back down, right? And Friday was important, I think, because we gapped down again, and then bears continued to push. We saw the long, kind of a Marubozu candle there. What I mean by Marubozu is in the candlestick analysis book, it calls it basically shaved top, shaved bottom, right? Shaved top, shaved bottom. There's no wicks. Upper wick, lower wick, no. So that's a Marubozu candle. Marubozu candle is strong candle, meaning that entire hour, there's no fighting going on. It's done. Like bears just brought it down. So we saw a gap down, and then we see Marubozu, and then on the second hour, we see that kind of fatty spinning top there continue lower. But why we all of a sudden find support and then goes right back up, and now this gap just got filled, right? So this gap just got filled. And you see how for the last 2-3 weeks, every time when bears trying to bring it down, that vicinity is been acting as support. And it all happened because of this gap. And this gap wasn't even entirely filled. You see this right here? Gap still not filled. And that favors the buyers. We saw another kind of a Marubozu candle to the upside. Looks almost like 3-day bullish reversal candle pattern there, right? Morningstar bullish reversal. We got the red Marubozu. We got the fatty candlestick or fatty spinning top there. And then we got that green Marubozu closed above it at 3.6. That's the neckline, right? I've been tweeting this almost every hour. We continue higher. And then in that process, you guys remember the tweet, we are getting above my short-term, my mid-term moving average. The price is no longer bound by more short-term moving. You see how my short-term moving average, my short-term moving average, my short-term moving average, my short-term for like days, couple days, but for like hours, every single, you see that upper wick here, every time there's that, you know what I mean, that attempt to make a run to the upside, that short-term moving average, just giving it tough time for the buyers. But finally, with that 3-day bullish reversal candle pattern, you can see that we finally got above it. And now, not only the price has gone above my short to mid-term moving averages, but it also filled that gap down that occur just on a Friday morning there, right? So, and while bulls protected this down gap, right? We talked about how on the tweets that I was tweeting out on Friday morning that it will be better for the buyers if they keep this gap open and fill this gap. And that's what they did here. And in that process, buyers were able to gap back above my short-term moving. Again, those short-term moving averages been just making it hectic for the buyers for a couple days. Every hour it seems. And then we're now finally back above it, back above my midterm move. And keep in mind, right, this is why we never wavered in the midterm. Always in the midterm, benefit of the Dow continue to went to the buyers because of the rising sentiment of that moving average. Just because we went slight below it, that doesn't mean a whole lot. It's the direction of that moving average. Anyway, so gap got just filled. So there's a couple of things we can potentially expect. Because gap just got filled, we may see this level as a resistance. We may come down or gap down, something like that. But if you do see a gap up on Monday morning, we may see some fast move to the upside just because we did see certain quick reversal that happened in the last 3 hours. And for the fact that we have not closed these gaps right here on that downturn. And also, it looks like the market might have found another rising pivot. That's a resistance, support, and support. We found the kind of a longer term rising support there. And what is it rising PP really represent? What does it really represent? Higher lows. It represents higher lows, right? And that's what we're trying to figure out all last week, right? In the daily update videos, where are we going to cultivate that higher low? Because as long as the market moves in this manner with the higher lows and higher highs, we want to continue to give benefit of the Dow to the buyers, right? And we talked about how when I say benefit of the Dow goes to buyers, it does not mean, right? It does not mean the market is going to go straight up. When I say benefit of the Dow go to the buyers, it means in an event where market pulls back like this, it has higher probability that it's going to cultivate that higher low before making higher high. That's what I mean when I say benefit of the Dow goes to the buyers, right? Hope you guys understand. Let's check out that oscillator here real quick. So oscillator, we kind of prematurely crossed here also, and you can see, you know, we're kind of in this level. You see these dotted lines. You see that dotted line, right? I mean, that's just very minimum level. You can see how bulls are, that's just the top of the dotted line, right? Bulls are pushing all the way above that dotted line. What is bears doing? Not pushing all the way below the dotted. They pushed it before right here. You see how they pushed it right here? And that was an October decline though. When we saw that October short-term downtrend, and that's when you saw that. But while we're on uptrend, you see how bears are not able to bring it below these dotted line like buyers been doing. That tells us that bears are not strong, bulls are strong, and we're on an uptrend. So when we do see a pullback, right, it has a high probability of making that higher low and continuing higher to the upside and make new highs. We did see a cross there on my oscillator right here. We saw a little bit of whipsawing action, came back down, but got right back up here. So if this thing starts to make a run to the upside, you know, and then if this thing goes back up to the top of its band, that means rally time. Let's go to daily chart here. So again, that rising pivot on the daily, we've been tracking this here. That's a big rising, long-term rising pivot. We broke above it, right? We're retesting it there. My short-term moving average on my daily chart is right underneath it as well. And I was talking about this, you know, these levels, not a random level, right? I put fib here from that peak of September peak and June lows. Basically measured this move here. It came down to my first fib, second fib, higher lows, and then we're getting up here, making another higher high, broke above my pivot there, and now we got 138.2% at 38,382 and 161.8% expansion at 400. So those are the target for this year. 382 I think is very much doable, but 400, can we get to 400, right? If this market really goes crazy, yeah, I don't know that yet. We'll try to figure that out as we go forward. But look at this short-term moving average there. You guys see my short-term moving average on my daily chart? Right? Resistance and support. Resistance and support and support and support. And we got the green candle there, and we're just getting right above that pivot right now. So if we see another day of a follow through to the upside, break above 367.12, there's good chance this market is ready to make new all-time highs, go after 382. So benefit of the doubt, we want to give it to the buyers, right? And what I talked about my short-term analysis here, now that we're above my short-term moving average and stuff, I want to give it benefit of doubt to the buyers. I want to say neutral to bullish. Neutral to bullish in the short to micro term, just because we just filled the gap. We haven't broken above it yet, right? So maybe on Monday we'll turn bullish if we do break above it and close above it. And obviously in the long term, man, we are bullish. Midterm, we are bullish. We're just trying to figure out short term right here, right? So that's kind of what we've been focusing on. Like okay, so we're just retesting this here, rising, prior pivot as potentially new support. Are we going to actually expect this level, kind of like here, right? Prior resistance as new support, prior resistance and new support, and gets back up 380. I think there's a good chance of that. If we do see a follow through one more day on Monday and break above it and stay above and close above about 367.50 or so. Let's go to Nasdaq. So Nasdaq, we've been talking about the rising pivot, right? This is what S&P could look like, because Nasdaq is a little bit different scenario. What the S&P is doing is they're trying to see what's going to happen right here now, right? That's what S&P is doing. Well, Nasdaq already gone through that road and is way ahead of S&P. So S&P is actually, what it already done is made this as a solid pivot, because it was resistance, and then we retested several times, and now retesting here, and then trying to continue higher. So maybe S&P is trying to do something like this right here before that move, that you see this move, before that move comes on the S&P. So I want to continue to give benefit of the doubt to the buyers here on the Nasdaq also. I mean, we got this gap remains open, that's a good thing that that gap is open, right? It would have been better if the bears came down and filled it so that there is not enough momentum, kill that momentum, but that momentum came from here, continue to make a move, market doesn't go straight up, so we're going to see a little pullback, maybe some consolidation before going higher, so we want to continue to give benefit of the doubt to the buyers, and currently we're holding at this level at 296. Let's go to Dow. Dow is consolidating, a little bit of wedge pattern here. Again, don't ever look at this as this is a bearish pattern or something. I mean, it can break out either way, right? Sometimes it looks like it's gonna break down and gets right back up. So I never like to put too much weight on these kind of. Sometimes it plays out. Sometimes definitely plays out, but I don't like to put a lot of weight on it. Here. This is a good example. Like if you looked at this as something like that, it's like, oh my God, man. Look at that. That's a fall. That's a bearish rising wedge. And then when this thing start breaking down here, what is a lot of people doing? Oh, they're shorting this. They're shorting at 230 on diamond. Why? They think we're going back down to the lows. We're gonna start cultivating lower lows, lower highs. Because why? That's a bear market rally. That's that primary lower high. That's that dead cat bounce, and then this thing is gonna crash, and then it gave you that you know what I mean, cinema like theatric here, dramatic sense, and then boom, and bears it was very difficult for bears. It was very difficult put holders. It was very difficult for those people who are looking for that dead cat bounce, crash, correction, and then came down, boom, came down, boom. What do we call those? Higher lows and higher highs, and we're on an uptrend. So let's learn from that lesson here. So we got another that wedge. So if this thing starts coming back down, I wouldn't think like it's gonna be crashing, but maybe look at that as an opportunity. But I've seen it both ways, where this thing could actually break out to the upside, but sometimes can be tricky. But consolidation, bears hanging around is always a good sign. Either there's a fake out, there's some head fake, because there's a head fakes here. That's a head fake right there. There will be some head fakes, there will be some shenanigans, but in an uptrend, in a strong bull market, when the price consolidates, you let buyers hang around. It's always a good sign, because if you've been watching my videos, I told you guys that buyers operate this way. Buyers like to operate in this way. Slow and steady, inch by inch. That's how buyers like to do it. Bears, once in a while, they'll just go berserk like this, but that's rare, obviously. You're not going to see that every day. That's a worst case scenario, but in a normal normal conventional, market run, even there's a corrections, usually bears will just bring it down hard. Like you can see this downturn right here. I mean, that thing I think was like 10-12% correction in just one day or 2 days. Boom, big 3% gap down 3-4%. That's how bears like to move. But most people, that's why they get so scared, right? And they think that when buyers are slowing down, they think it's weakness. And somehow, most people think bears are always winning, just because when bears come, it seems like, oh my God, they're furious. But when the bulls come, it's like, oh, I don't know, right? But when we go to Russell 2000, though, you can see sometimes, you can see it collectively, you see how the bulls move. This is collectively, though. You see how there are consolidations after consolidations after consolidations after consolidations. Collectively, they make that kind of move, right? Maybe bears should make that kind of move to the downside in 1 day or 2 days. But in a bull market, that's how bulls move collectively, inch by inch, slow and steady. That's how they move, right? And so that's how you want to take this market. This is the reason why so many people are always so scared, because every time when they get in, they're scared that any moment we're gonna see some big, long, bloody red candle and wipe everything out. Instead of thinking like that, it's gonna wipe everything out. I would say, my gosh. I mean, seriously, if I see Russell 2000 coming back down to 170, I don't know if he's going to. Let's say if he does. I look at it as, thank you. What a gift. Thank you. right? So your whole perspective kind of has to change how you interpret this market there. We got the rising pivot here, right? We're hitting that couple times, several times. We finally broke out. These green boxes represent island bottom reversal. It's moving. It's moving. Remember, do not ever try to call top, ever. Right? I don't know where the top is. I'm not going to try to call it, right? I want to continue to give benefit of the doubt to the buy. We haven't even begun to retest that 20 MA. Can it continue to go higher? It could. Nobody knows where the top is. I mean, you guys remember even just looking at, I don't know, it was a little bit more volatile back in 2017. I mean, like, even if you look at this here, after a steep decline in 2016, and you saw this move right here is a big, fast move here too. Those are some big moves, some over here. I mean, we don't know. And even when we do see a pullback right here, I mean, all of those gave you buying opportunity, accumulate to make a next run. So after this big move, instead of chasing it, okay, when we start to see a pullback, you know, you start maybe accumulating longs, right? You might not get immediate results, but if you held through, position yourself for the next bull move to the upside, right? So if you're not on Russell, well, I wouldn't chase this, but maybe wait for the next pullback there. Let's go to VIX. So VIX, we talked about this on the last weekend video that we're gonna have these, you know what I'm saying? We're gonna have these pops. Especially, I looked at that 20, that I think it's 20 MA, my short-term moving average there. Look at that light green or bluish moving average right there that's coming down. That's a resistance, that's a resistance, that's a resistance, that's a resistance, resistance, and then resistance. You see a long upper wick here, right? It's not coincidence. It actually was not able to close above that falling short-term moving average, just like right here. Look, you see the long upper wick there, right? It is not coincidence, right? It's just, and I said this was going to happen. And you go back and watch my last weekend video, and you can just find where I was talking about VIX. We're probably going to see these pops hit my 20, come down. Pops, hit my 20, come down. Pops, hit my 20, come down. And then probably feel all these gaps, right? And I think it's going to continue in there. Let's go to gold. Gold, so I gave you that fib level here. Obviously, in the short to mid-term, yeah, we're kind of in that downtrend because we got the lower highs, right? But in the long term, we got the higher low. So we're trying to figure out, well, where is going to be that higher low? We don't know yet. We haven't seen that higher lows and higher highs yet. So I gave you the fib. That's a 50%. We did see an initial bounce, but we got to start cultivating higher lows and higher highs in the short term. See my short term moving average moving like that. The price going back up and start surfing it up. We see something like that. Trend will change for now. We're still in the short to mid term, kind of a basing period. And it's not bad because we're not like tanking, but it looks similar to like this. Right? So if you really like gold, you know what I'm saying? Do not try to pick perfect bottom, but start accumulating. And if we fall, if it falls further, make sure you have enough, firepower to maybe add more and then ride the next move higher. But don't ever try to chase it later on. Let's go to Bitcoin. I'm going to end the video with this. So very interesting price action of Bitcoin, and this is kind of what I mean. I mean, when things get all hyped up and stuff. So, and you guys know that I went long here in that vicinity. Well, actually here in that vicinity. So here, something like that, and then I close out 1/3, or collectively half near the top there. And then this thing tanked, I added more here, and then I'm holding full. I haven't done anything ever since I added here. So now you can see the gap still remains open. That's a good sign. Let's put a little level there. So this gap is still open. That's a good sign. We saw that big bounce, which looks like a kind of a bullish engulfing candle. But just like any candlestick analysis, we want to see a follow through next day. We never saw it. And you can see it is no coincidence. It is just right below my short-term moving average. And the next day just gaps down. So technically, we actually have a down gap still open just a little bit here. So it needs to fill that gap. It might come back down, retest, and challenge this gap. We're kind of a little bit in a hectic situation because it looks more like we're on a sideways. And then my short-term moving average is kind of like, we need to get back above 2151. Gapping up will be the best case scenario for this to make new highs. If not, it may come down trying to challenge this gap. This gap either gets filled or not. I think it's like the strong support anyway. Plus we got strong pivot so far. Look at that rising pivot. They were resistance before, then now currently potentially support. And look at that. It came down. It took you one day. One day you blink, you second guess yourself to buy this dip. You missed out. But then if you didn't chase it up here though, like let's say you missed out this and the next day this thing goes up 20% or something like that. If you didn't chase, you had your chance here. And if you did chase, I think a lot of people did, because market is so good at this, man. Every time I look at it, I'm just like, wow. Market, and sometimes, just very, very occasionally, market will reward you if you're chasing it, but more often than not, what market will do, people chasing it, you gotta just punish them. So, I mean, let's say if you chased it, right? You chased it, come down, maybe add a little bit more, but if it comes down again, if you maybe work like that, maybe it will work better instead of just like chase it, oh, gotta stop that, oh, go long, get stopped that, oh, go long, get stopped that. You see what I'm saying? So anyway, there's my analysis for this weekend. Hopefully it will help you in your own analysis. Enjoy your weekend. I'll come back for you, and good luck trading next week. All right, guys. I've decided that I was going to, start a promotion for the month of December, and this is going to be, if you've been thinking about joining my Traders Club here, I am running this promotion until end of this month, which is end of December. So until the New Year's Eve, the 31st of December evening. So, as you guys know, and if you've been thinking about it, joining the Traders Club, I don't run promotion usually once a year. I do, and so this year, for the last month of this year of 2020, I'm running the investors membership, the yearly plan. So you would have to sign up for the investor membership to take advantage of this promotion. And so, a lot of people ask me, what's the difference between, just some of the things you talk about on Twitter and the what you share on the on your YouTube videos. Well, obviously, as you guys know, here's the plan there. As you guys know that the daily update videos that you watch on a daily basis is looking at actually very, very short term of this market, just kind of forecasting what's going to happen this week, maybe next couple of days and things like that. On the daily, I do give you, on the weekend update videos, the weekend analysis videos, I do give you a little bit more comprehensive recap, giving you the longer term outlook, but it's nothing. And I'm not exaggerating things, but it is nothing like what you could find in the member videos. So obviously I got 3 plans here, but currently I'm only running the promotion for investor membership alone. And you would have to do the yearly, which, when you go back here to sign up, here, if you click on there, you'll get to that payment page, all of that. So, and it will get to that yearly pricing. I'll get to it. So basically, regular price is $4.90 a month for investor, and it's $39.90, right? $39.90 for a yearly. And with the promotion that I'm running until end of this month, end of this year, right? We got about remainder of this year, and you got some time to think about it, right? You don't have to make hasty decisions or anything like that. Think about it. If this is something you think it will be helpful in your own analysis, in your own navigation of this market, you can take advantage of this. So what I do for my members is that obviously they would have a full access to all of my long-term stock picks, right? So, and you hear me talk about this kind of stuff I mention things, my recent trades, some of the positions that I hold, and I talk about it. I mean, you guys, if you go back to some of the videos back in like April lows and May lows, you guys remember me talking about, I like Google here, I like Apple here. You guys know that I was buying Bitcoin. All of those entries, exits, and add points, you get all of that picks and updates right here, right? Entry, add, and updates you receive as investor member. So, and these are not just like stock picks for the sake of stock picks, right? Like I'm picking stocks here and there. No, actually, these are the stocks that I'm actually getting into. I will not share any tickers if I myself is not involved in it. So if you can think about like basically if I'm going to get into this stock, for me to be investing on this stock or position trade, then my member is going to hear about it and get updates on it ongoing basis, right? So, and I know that a lot of members that I currently have, almost all of them come from day trading, comes from like swing trading, come from overnighting, scalping, you know what I mean? Here, in and out kind of thing. And as they watch my videos, they realize they want to be more long term. So they don't have to be so occupied with the market. They want to look at things longer term. To able to do that, right? You really have to have a good analysis, macro trend analysis, right? This is something that I do with my members. If not a weekly basis, you would have these updates on this throughout the week, throughout the days. And also there will be special report videos where I will cover, we're talking macro, where the market is going next 10 years, right? I actually done just this recently, this new video for my members, right? S&P 500 destination, 16,000. And if you look at the number now, you're like, what? That doesn't, and if you watch my video, and this is about an hour, maybe hour and a half video, and there's a video like this in my special report video, there are videos like this, like 6 of them, going all the way back to 2016. And I can stand on my 2016 analysis that I've done back in 2016 lows. I'm talking when Spider was trading at 180. We're talking S&P at 1800, right? We're sitting right now 3700, 370 on Spider, right? And I can still stand on that today because we understood the macro sense of this market. That's why we stood strong even after the COVID decline. And I've done a video for you guys here. If you go watch this right here, March 21st, this is a free video that I've done for my YouTube followers and my Twitter, my social media followers. And obviously, member video will be much, much condensed and much more, comprehensive and covering more areas. And there will be more videos like this on a special report section. And there will be more videos ongoing, giving you guys an updates where the macro sense, because things can change, obviously, right? And so that's kind of that's how we've been navigating this market since 2016 lows, when Spider was at 180, right? Now Spider trading at around 370. This means Spiders could be at 1600, right? And I go over this with my members, and we talk about these kind of things while everybody is so concerned about these short-term fluctuations, always getting scared, right? So that's something that I always tell my members is that if you fully grasp on where the market is in a macro trend perspective, you won't be scared when there is these kind of fluctuations, volatility, because that's market, man. I mean, you cannot have this market without volatilities. That's just given, right? That's just part of this market, and people always trying to avoid it. That's the biggest problem. When you're trying to avoid volatilities, is when you're gonna miss out big runs, and that's exactly what I'm talking about. And if you're, kind of also if you have like a larger fund, you're working with a big capital, we're talking about $1 million or more, definitely you want to put a lot of that percentage of your portfolio into index fund, and then have some other portion get into some position trading, long term. You kind of want to have a good, well diversified portfolio, especially if you have a larger account. And this is where it comes handy here. I also go through my index fund investing guidance, guiding through which indices to get in and how much, which levels. And that's something that I go through every member plus or member semi-monthly report. So as investor members, you will get your semi-monthly report. And in those videos, I go through all of my current holdings, give you guys a review on it and updates, including my index fund positions, right? Keep in mind, again, for my members, every single tickers that I go through, every single one of them I am involved in, right? I don't just pick stocks and just tell you guys about it that I think it's a good buy and I myself don't have it. That way, you will continuously get updates on this, right? So my job as your instructor here at Traders Club is telling you where the market is going in the big picture, right? In the long-term picture and also intermediate term. Right? Short term, we cover this on my free videos on our daily updates and even on the week, and those free videos that I do for you guys on YouTube videos. But with my members, I focus on the long term and then how we should be positioning ourselves, right? And along the way, you will get your updates on, I'm holding Google, I'm holding FedEx, I'm holding Alibaba, I'm holding Apple. Okay, what should I do? When should I close some? When should I buy? Which level I'm going to be buying more? Which level am I going to be closing it out or closing partial position? Things like that. So, right, that's what I'm saying here, a case holdings review, right? So macro trend analysis. And we have a video lesson library. And if you're really you really like this technical analysis stuff, you like analyzing things, you want to learn more about how I approach this market, there's tons of videos for members in a video lesson library. There must be, I don't know how many, 50 videos, some of them are like hour and a half, 2 hours videos, showing you all the way from like how to properly, set up your charts. How do you look at bullish divergence? How to look at your indicators? All of that. And some of you guys even wondering, what about those chart setups, okay? What about your configurations? I have those disclosed in my member area. If you want to get really techy with that, like if that's your thing, like you want to learn all this, you want to learn how to use these indicators, how to look at the market, all of that, you have that in my video lesson library. If not, you can just, you can use this membership to help in your own analysis and navigate this market, right? Obviously, the market guidance, right? I've done guidance for you guys here back in COVID-19. This was chart, right? Near the March lows right here. Something like this. There's analysis, a lot of analysis that I've done for my members back in March lows, April, May, June, where to buy, what to buy, right? And I've done something similar here, March 21st, right? March 27, right? We're talking about generation, maybe even lifetime buying opportunity. March 27, right? Major support, potentially bullish reversal. April 3rd, important inflection point. April 11, constructive follow through. April 19, okay, we might have the lows that put in. And we're talking when the S&P and the SPDR was trading at 220, 230, 240, 250, 260s. Now trading 370s. This is when, when the mainstream media were lying to you. TV, quote-unquote, experts were lying to you, right? Everyone out there were lying to you that this is a bear market rally, right? This is not going to end well. Well, guess what? 3-5 months later, we're at all-time highs. And guess what? Semiconductor Nasdaq performed 80 and 90% since the March lows, 50% year to date. Majority of people were not able to forecast this. Do you know why? Biggest problem is this: macro analysis and forecast. We never were in a secular bear market. We're always in a secular. This is something we understood here at the Traders Club, even after the COVID decline. I think Wall Street Journal came out, said something like middle of March that bull market is dead or bull market ends or bear market starts. You guys remember that article, right? Wall Street Journal or something, some other major publication, very, very popular, right? Bull market ends or bear market starting or something like that, right? No. We are never in a secular bear market. And all of this I explain in my videos, in my special report videos. So you understand. Are we in a macro secular bull market or secular bear market? Because in a secular bull market, you get those fast recoveries. In a secular bear market, you don't. And you gotta understand, you gotta able to distinct the two, right? Differentiate it so you can able to adjust your portfolio accordingly. March lows, April lows have been my biggest buying opportunities, right? I'm actually thankful for March lows and April lows that happened with the COVID decline. So obviously I do offer other plans here, other memberships, and those are for option trading, other things. But you know, for if you're looking to kind of understand these things long term and want to learn how to position trade and long term invest in this market because you're tired of getting in and out, getting stopped out. You look at your account last couple of years, really haven't gained anything. Where is the market? Again, market was 180 in 2016 lows. We're close to 400 to like this year, right? And because when you're in and out, a lot of times what happens is you miss out on a big moves. And then when you see a big COVID decline like that, a lot of people get scared. They trying to short, market goes right back up. And this is where people try and short, trying to, time it the next leg down, thinking this is going to start a bear market. And they completely miss out and lose money and miss out that run. And I call that double loss because you lost money shorting and you lost the opportunity. So there's opportunity cost, missed opportunity cost, and you lost money shorting. So actually that's a double loss, right? So anyhow, so that's the membership there with the investor membership that I'm running right now. So feel free to go. I'll put the link below, description below, so you can check it out and go through. You can go through these things that I've presented to you. There's a performance here. There's a broker statement here for 2020. These are my win rates. You can see I got pretty high win rate, right? Because I do not get into a position in and out, in and out, in and out. That does not mean I get into a position that goes straight up right away. That is not what this is mean, right? What this means is, let's say I entered long, maybe this thing did this or this did that, but because I do not let this market get to me or trap me, all right? I don't want to fall into a victim of some kind of a shenanigans or head fake. Let's say I got into it here. I might add here. And you guys saw how I trade my Bitcoin trades. You guys remember that? Something like that. And then when I start getting it out, those are winning trades. Instead of getting stopped out here, getting stopped out here, getting stopped out here, getting stopped out here. You know what? I'm sick and tired of this stuff. I'm going to throw this ticker away. Month later, you come back, that ticker is like 30, 40, 50% higher. You guys know what I'm talking about. And that's the reason why I think I've been having really good win rates in the last 4 years. And last 4 years wasn't such a greatest market condition either. Because we've seen like market goes up, 2017 we tanked 12%, market got up, 2018 we tanked like 25%, and then market got up and there was a COVID decline. So market was actually pretty volatile in the last several years. It was actually difficult seasons that we actually went through in the last 3 years. And I actually think, and that actually helps this market in the next 3 to 5 years have a good years, because we had such a kind of a volatile years last 3 years or so. So you can go through these and click on here, right? Join, right? Again, you have to sign up for the investor yearly plan to qualify for this special promotion here that I'm going to be running on the end of this month. Again, the last day will be December 31st evening time. Click on here. So you'll come to this page, right? And then, carefully read through those. Make sure to fill out all the required fields and click on here, sign here. And then this is where you're gonna click on that, and it's gonna get to your PayPal account to put all your payment information, right? So hopefully, if you do sign up, I'm looking forward to trade and invest and navigate this market with you. If not, it is totally cool. Continue follow me and on Twitter and StockTwits and YouTube. And you can continue to follow me that way and follow my work. But thank you for listening to this presentation.